Okay, guys. So we're now going to move on to the EMA. Okay, the exponential moving average. I talked about it yesterday, and today we're going to go into a little more detail about it and what it does for you, how it helps you. Okay, so let me turn it off first, and then I'll just first talk about moving averages. Then we can now explain the exponential moving averages, and most importantly, what it does for you. So moving averages here, you can see if I turn that on, I have my moving averages, and to set it up again, you go to the setting icon, tap indicators, and you go to main. That's main, that's on the chart itself. The indicators on the chart itself, those are the ones that are under main, and you tap the MA. So what setup do I have going on here? I have 5, 10, the values are 5, 10, and 20. Okay, so the smaller the value, the closer it you know mimics the price action. All right, so remember, these are averages, so it's calculating the price of that particular project, or that particular coin over a period of time and producing an average. That, so the closer, the lower the value, the closer it follows the price, the actual market price per time. Okay, and let me show us what it does. So you just set it up, do your colors, choose the colors you want and all that. That's entirely up to you. And then these are the figures I'm using, the values I'm using for the moving average. Good. Confirm and go back. Now on the chart, you can see the main purpose of these moving averages is to tell me something while I am trading. Now you can see that when we're in an uptrend, there's a different combination of or arrangement of the colors than when we're in a downtrend. And this is what you should take note of. Okay. Now, in an uptrend, that's where the price is going higher. The smaller value, that's the 5, is yellow, remember? And then the 12 is pink. Let me just confirm those figures again. So, okay, you can see it up here. MA, that's moving average 5, is yellow, moving average 10 is pink, and then moving average 20 is purple. So this is the order it should be in when the price is going up in an uptrend. Okay, the trend is going upwards. So the yellow is right there closer to the price. Remember, it's a smaller value, so it's following the price closely, more closely than everybody else. And so it's at the top, and then the largest moving average value is at the bottom. That's the 20. That's how you know an uptrend. Then in a downtrend, you see what has happened here. The 20 moving average has gone above all of them. And then, of course, the 10 is at the middle. And then the 5 has crossed down below all of them. It's as simple as that. It's not difficult to understand what's going on here. So how do you now use this information? Now, these moving averages will help you. Look at here. Let's consider where this dip happened, this super dip that took place here. Now, look at it. When you see the moving averages converging and they're coming together, and they now form almost a straight line, you know that trend is about to change. So we're in an uptrend here. Yellow was at the top, and then purple was at the bottom. And then we got to this point, they squeezed together. And then what happened? Yellow crossed. So at this very point, let me take that back here. At this very candle here, where yellow crossed, okay, that tells you the trend is about to change. But you wait for a confirmation, maybe the second 1 hour time frame here, the second candle, the second 1 hour candle, yellow is still at the bottom, okay, and it's continuing. And of course, selling volume. Look at selling volume. So you see, we're combining all the indicators here to tell us what to do. Selling volume is also here, and you can see the RSI. Look at the RSI here. What's going on with RSI 5? 14. Okay, RSI 5 is 14 at that point. And then that means a dip is happening. And hold on, let's go back a bit. look at that point where RSI is at 58. So the RSI is reducing and reducing as this sell volume is increasing, and as these moving averages have switched rows or positions. So the yellow is now down. So that tells you that a downtrend has now commenced. So it continues like that. And then this happens here again. A cross happens here again. And then yellow goes back to the top. Purple comes back down. Trend has changed. Uptrend. That's what it tells you. It's as simple as that. So when the smallest value moving average is at the top, is on top, then you have an uptrend. When the largest value moving average, MA20, is at the bottom or goes to the top, then we have a downtrend. If it's at the bottom, then we're in an uptrend. That's what you need to know about the moving average. So now let's go to exponential moving averages. Now, the exponential moving averages are giving us much more information. Now, how do I have it set up here? You can see that you can't have two of them. You have to use one. It's either the EMA or the EMA. So let's go to EMA now. How do you set it up? It's the same thing. Tap the icon, go to indicators. Under main, you see EMA. And I have 9, 21, 50, 120, 200. Now, why do I need this 200 here? I need this 200 here because I want it to tell me the value, show me the value, show me the trends, reveal things to me over a long period of time. So I'm dealing with a coin that has been around for a very long time. I prefer to have large, higher value moving averages working for me. Okay, so let's go back to, of course, set your colors and everything. So the principle is the same. Look at the colors here now. We have the lowest value, 9 is yellow. Then 21 is purple. 50 is red. 120 is pink. And then lastly, 200 is green. So look at this downtrend. You can see it very clearly. We're in a downtrend. Why are we in a downtrend? Of course, price has gone down. And the EMA has shown you very clearly that we're in a downtrend because the green, the 200 EMA, is at the top. It's not supposed to be at the top, but it's at the top. We're in a downtrend. If we're in an uptrend, okay, let's go to a higher time frame. Let's see the 1 hour time frame, or let's go to a daily time frame. Day time frame now, 1 day. So each candle represents 1 day. Okay, so look at this uptrend here. We can see here that the 200 EMA is at the bottom. So that's an uptrend. And then when the downtrend was about to switch, or it struggled a bit here, the EMAs just, squeeze themselves together and then continue the uptrend a bit. And then a downtrend happened briefly. And then it now confirmed that we're in a downtrend with the 200 EMA at the very top. Now, again, you're going to see that when a trend is about to change, you'll see the convergence of these lines. Okay? It reminds you of the MACD, Abi. MACD, that's moving average, convergence, divergence. It's just showing you what is converging, what is diverging. Okay? And you set your values. But look at it. They squeeze themselves together when the trend is about to change. And it's important to take note of that. Now, these indicators are things that will help you take decisions when trading. We don't just trade because price is low. Price is low is not enough reason to trade. Because price can be low and then you buy and price will go lower. You say buy the dip, buy the dip, buy the dip. You go and buy the dip and the dip is still dipping and it's dipping you into deeper life. Okay, so that's a problem because you're not using indicators and you're not using both fundamental analysis and technical analysis to decide when to take a trade. That's why that a price has dipped is not enough reason to buy. You need to be sure that that price point is a good price point to enter. So all these indicators will help you. So we've talked about the volume, very important. What is the volume doing? Is volume small? Are people trading? Are more people buying or more people selling? Green and whether it's a green or red volume bar will let you know that. RSI.